had some issues on Wednesday where Charlotte was being muted and she wasn't muting herself. So I would be very pleased if that didn't happen, because that obviously interrupts the slides that Charlotte's going to go through. So for those people services team and also the payroll team, obviously been working very closely with L&G and various other people in the business on the pension consultation. So I will now hand over to Charlotte. Sarah, it doesn't seem to be letting me record. I don't know whether you've got the same experience.
Yeah, that's right. I don't seem to have the ability.
No, whereas I know I do because I've tested it on other calls, but it's not letting me do this. Right. Okay. So I think we're not going to be able to record it, but obviously we have the slides. And what Charlotte will do is obviously go through the slides. If you can keep your questions to the end. What we did on Wednesday, which worked really well, was people could either come on camera and ask the question, put the hand up at the end of the presentation, please, and also put stuff in the chat. And then we worked our way through those questions in that way. So over to you, Charlotte.
Thanks ever so much. So hello, everybody, and welcome. My name is Charlotte and I work in the presentations team at Legal & General. And my role is all about supporting members at different stages of their working life. And this session has been designed to give you an overview of your new workplace pension arrangement, the Restore Pension Plan, that you became a member of in August. Now, we do feel it's important for members to engage with their retirement savings and to think about their future. And we hope that the session today will help you to start to make the most of your own pension savings. Now, before we start any of our presentations, we do need to give a couple of risk warnings. So just to let you know that this is a general education presentation and doesn't represent financial advice. And it will be based the information on the current tax year rules of 2023 to 24. The law and tax rates and any allowances may change in the future, and we'll be covering investments today. Please note that the value of your investments will go up and down. It isn't guaranteed, so you may get back less than you put in. So today we'll focus in on the important information that will help you to get to know your new pension and to understand your next steps. We'll cover how pensions work, we'll look at investing in a pension, taking money from a pension and pension transfers. We will also explain how you can manage your pension and use the resources to help you to plan your future. So let's have a look at some key messages that your employer has put together. So they wanted to just welcome you into the Restore Pension with Legal & General, and to say that the new Legal & General pension will give all colleagues who participate in the pension access to information all in one place. This will enable them to support you in better understanding your pension and how to plan for your own retirement. And the microsite that was being put together that I'll talk about today will offer you a huge amount of educational and planning materials that can support you in your planning journey. Now, the Restore Pension Plan is a Legal & General Master Trust, and a Master Trust is an umbrella workplace pension scheme that multiple employers participate in, with Restore having its own section in the scheme. It's run by independent trustees, and they're responsible for making sure that the scheme is run in the best interest of you, the members. They decide the default investment option, which are the funds that your money are invested in if you do not make an active choice, and they'll keep those funds under review for you. They'll also have lots of other responsibilities, including ensuring that payments are processed efficiently and continually assessing whether charges represent good value for members. And to learn more about our Master Trust, you can visit the website. So a little bit about Legal & General. So we were established in 1836, and we are a leading financial services group and also a major global investor, safeguarding people's financial futures around the world. As a UK market leader in pensions, life insurance, workplace pensions and retirement income, our mission as an organisation is to improve the lives of our customers, build a better society for the long term and create value for our shareholders. Now, our investment management company is called LGIM, and it's one of Europe's largest asset managers and also a major global investor. Now, we'll offer you with access to support and educational resources that will help you to understand your scheme, including a customer helpline, dedicated website and member guides. And we have a range of digital tools that will help you to engage and plan for your future, such as an online portal called Manage Your Accounts, as well as retirement planning tools and financial well-being information. Now, for some of you, the future may still appear to be a long way off, but whatever life stage you're at, saving for retirement will be important. Your Legal and General pension will provide you with a source of income that can help to replace your salary when you want to slow down or stop working altogether. And more of us today are saving into workplace pensions, and we've now got more information, we've got more choice, and we also have more responsibility for our savings. Research carried out by the Pensions and Lifetime Savings Association showed that 77% of savers don't know how much they'll need for retirement. So they created the Retirement Living Standards, which is based on independent research by Loughborough University, to help savers to picture the kind of lifestyle they could have in retirement. And the standards show what life in retirement will look like across different levels, minimum, moderate and comfortable, and what a range of common goods and services may cost in retirement, including things like household bills, maintenance, food and drink, transport. Now, please note that the figures that are shown on the slide are based on people living outside of London and are showing after tax. Now, you'll have the opportunity to use this research within the tools that we'll provide you with, and by creating goals for the future, you can then regularly check if your savings are on track for that lifestyle that you're hoping for. All our tools are accessible from your online account. Now, one of your income streams in retirement will come from the state pension, and you must have at least 10 qualifying years of national insurance contributions to be entitled to receive the state pension. To receive the full state pension, you'll need 35 years worth of qualifying national insurance contributions. And you must have reached the age that's set by the government that entitles you to receive the state pension, which is currently between age 66 and 68. And the actual date you become eligible depends on your own date of birth. It's worth knowing that as well as paying your contributions while working, you can also earn qualifying years by receiving national insurance credits if you're unemployed, ill, as a parent or as a carer. Now, for this tax year, the full state pension rate is £203.85 a week, or approximately £10,600 a year. Now, you can check your own state pension forecast by visiting the government's website to get a better idea of what you might receive and when. There are short-term and long-term benefits when it comes to saving into workplace pensions. So you'll get tax relief on your personal contributions, subject to some upper limits. You'll receive contributions from your employer. Your money is invested and has the opportunity to grow. And at retirement, you can take your money in different ways. You can even pass that money on to your loved ones. So the scheme is a defined contribution pension scheme, and contributions are paid into the scheme by both you and your employer. You'll benefit from tax relief on the money that you're paying in. That money is invested for you that goes into the pension and is then subject to investment performance, and charges are deducted for managing the scheme and the investments. You can access your pension in different ways, of which you can choose, and we'll look at this a bit more detail later. And from age 55, you can access your pensions. This will increase to age 57 from the year 2028. Although the options available to you sometimes depend on your scheme rules. Now, there are different structures for different categories of employees, but all of the contributions that will show on all of the slides will show the contributions your employer will make and the minimum contributions you must make as a percentage of your pensionable pay. So on the slide for you now is base pay, which reflects category 1. And if you belong to category 1, then your base pay is used to calculate contributions paid into the pension. So this will be your basic pay, excluding bonuses, commission, overtime, one-off payments, benefits in kind, such as a car allowance or healthcare, and any other amount determined by your employer. If you're not sure what your contribution level is, you can contact your employer. If you are part of qualifying earnings, you'll belong to category 2, and qualifying earnings will be used to calculate contributions based into your pension plan. These are your banded earnings set by the government, comprised of basic pay, overtime, bonus, commission, statutory sick pay, statutory pay received during maternity, paternity, adoption pay, or any other type of family leave. It will include holiday pay and any other allowances as determined by your employer. Total pay is if you belong to category 3, and your total pay here will be used to calculate contributions based onto the pension plan. This will be basic pay, overtime, statutory sick pay, statutory pay received during maternity, paternity, adoption pay, or any other type of family leave. It will include holiday pay and any other allowances as determined by your employer. Now, if you're thinking of changing what you pay into the pension, you should bear in mind that there are some limits on how much you can pay before incurring a tax charge. You can potentially pay in the equivalent of your entire annual salary each year, or up to £3,600 if you earn less than that, and get tax relief on the contributions. However, you should be aware of the annual allowance. This amount has been set by the government at £60,000 for this tax year. It includes money that you or your employer has paid in on your behalf to this or any other pension plans you may have. If the contributions exceed the annual allowance in the current tax year, you'd pay tax on the amount above £60,000. The annual allowance can be reduced through the tapered annual allowance if you earn more than £200,000 a year. It can also be reduced if you've already accessed your pension in certain ways and are continuing to pay into a pension. This is called the money purchase annual allowance. There's a limit on how much you can build up in your pension over your lifetime, known as the lifetime allowance. And in the current tax year, the amount on the screen for most people allows you to take up to 25% of that amount as tax-free cash. If you exceed the amount, you'll pay tax on the excess at your marginal rate of income tax. Note that the government plans to remove the lifetime allowance completely from April 2024. Now, as these allowances change, we'll update our information on the scheme website, and you can access the tax year rates and allowances booklet. And you can also visit the government's website for further detailed information about how the allowances work. If you need help with tax yourself and your own pension savings, you may want to take personalised financial advice, and you can do this by going to unbiased.co.uk. Now, one of the questions that we typically get at presentations is, how much should I contribute into the pension? And this is a really difficult question to answer because we are, of course, all individuals. So you should pay into a pension as much as you can sensibly afford to, and it should be somewhere in line with your target income at retirement. It is worth reviewing your contributions regularly and increase the amount that you pay in if it's possible to and you can afford to do so. Regular increases across your working life, even if they're small amounts, can really add up over time. You can use our retirement planning tool to see if you will be on track to have the income you're looking for based on what you're saving at the moment. We'll now take a bit of time to look at some investment options of the Restore pension plan. Now, when it comes to investing your money, there is a relationship between investment performance and investment risk. If you want the potential for better returns, you'll normally have to accept more risk. And in return for the possibility that the value of your savings might go up by more over the long term, there will usually be a greater chance that your savings will go down and up by more and more often over the same period. So this means that if you choose a high risk fund, that you could lose a large part, or in some cases, all of the money that you've invested. By investing in a low risk fund, you're unlikely to lose your savings, but they're unlikely to go up in value by as much. Now, you can reduce risk by putting your money into different types of investment that have varying levels of risk associated with them. It's important to be aware that in periods of extreme market shock, certain asset classes can be more volatile and therefore more risky. Now, with pensions, there are 4 main asset types that they invest in. This is cash, bonds, property, and shares. And your pension fund can invest in just one of those asset classes, or it can be across a mixture. To find out more about risk and reward, you can take a look at our risk and reward brochure that you'll find on the scheme website. Now, when you put money into your pension savings, we invest it in company shares, among other places. This is all, of course, with the aim of helping your savings to grow. And as well as caring about your financial future, we do believe that we have a responsibility to consider the impact that these companies have on the world around us. That's why we consider environmental, social, and governance factors into the investment process. Now, our investment experts that sit within Legal and General Investment Management, they manage pension contributions as well as those of millions of other savers, meaning that we can influence some of the world's largest companies. And if a company isn't changing the way that they work, we'll work with them or engage to help them to make these changes. And we do this because we believe that companies that are managed well, who tackle the impact that they have on the climate and look after their employees, are more sustainable in the long term. Put simply, looking after the planet and the people on it is the right thing to do. To learn more, you can visit our ESG hub, and this can also be accessed from your scheme website. Now, your scheme has a default investment option, which we will look in a bit more detail shortly. And a default investment option is a fund or funds or lifestyle profile into which your savings will be invested if you don't want to make a different choice. And although it's considered to be a suitable choice for most scheme members, the default investment option won't take into account your own personal circumstances or your future plans. So if you want to make your own investment decisions, you can find the details of the investment options available to you either through your scheme website or by visiting your online account. If you want to make a change to your investments, this can be done within your online account. Now, if you are thinking of making your own decisions, you should check whether the fund or profile you're considering does match your own attitude to risk and plans in retirement. Also important to consider taking financial advice if, of course, you want to choose your own investments. So the default investment option are the target date funds, and the target date funds are the option for your scheme. So the target date fund allows you to match your investment strategy to a 5-year period that will normally include the date that you intend to start taking your savings. And the fund manager will invest your money into a range of different assets to give the benefit of diversification. So, putting that more simply, by not putting all the eggs in one basket, you're not then reliant on the performance of any one type of asset. Now, the way that the savings are invested is adjusted over many years as you move closer to and then into retirement, giving you the flexibility to decide when and how you want to use your savings. And you can see an example of one of the target date funds on the slide. You can change to a different target date fund at any time you want to. There's no limit on how often you can do this. If your retirement plans change, you can choose another target date fund. And for more information, including a video, you can visit the scheme website. So we'll now look at the charging structure of the scheme, and there are 2 types of charges that are made to your investments. There's an annual management charge. This covers the setting up and the running of the scheme. So this will always be a percentage of the value of your pot. And the fund management charge covers the running of the default investment. So in this instance, we're talking about the target date funds for your scheme, and gets combined with the annual management charge to make up the total charge. If you decided to invest in a different fund, then it's the fund management charge that would change. And for more information, look at your scheme website or visit your online account. Now, as a member of a workplace pension, you'll have the flexibility to choose how you take your money at retirement. And we will look at these options in a bit more detail shortly. But before we do recommend that members should always consider taking the free guidance that's available. So if you're age 50 or over, you can speak to a PensionWise specialist who can help you to understand all of the available options and tax implications of each option. You may also wish to consider taking financial advice in the future. Now, we've mentioned that the earliest that you can access your savings in the scheme is from age 55, and you may be able to access your savings earlier than this if you have an illness that means you're unable to work again in the future, or if you have a protected retirement age. It's worth remembering that the government has implemented legislation that will increase the age of access for pensions from age 55 to age 57 from April 2028. So how you can take your money is in different ways, and you can choose the option or combination of options that suits you and your circumstances. The first 25% of your pension can be taken as a tax-free cash lump sum. The remaining 75%, however you choose to take it, will be taxed as earned income. And the amount of tax you pay does depend on your earnings. Now, you don't just have to choose one option or even one provider. You can choose different options for each pension you have. You can even transfer all or some of your pension to another provider and have benefits paid by them. Now, just bear with me while I set up a short video that will explain the options in more detail. Just going to get up your scheme website and play a slightly different video. I was having some technical difficulties with one of the videos, so good opportunity to show you your plan website and also where you'll find lots of educational resources. So let me just switch across, move my screens and share my audio so that when we do play the video that you'll be able to see it. So I'm on the home page of your scheme website that you can access by going to legalandgeneral.com/restore pension plan. And you'll see lots of different information here, information on joining a scheme, so lots of relevant information at that stage, being on your way, getting there, and then arriving at retirement. If I scroll down the page a little bit and I go to getting there, one of the things that we'll have at each stage of the journey is a bite-sized video. Now, this particular video will give some useful information about the options for taking your money. So without further ado, I'll just play that for you.
You've worked hard and have put some of the money you've earned into your retirement savings. Now is the time to make decisions to enable you to enjoy the next chapter of your life. You're ready to think about taking your money, so it's time for a reality check to make sure your savings will provide the lifestyle you've planned for. You need to start thinking about the options available to you at retirement. As you approach retirement, you should start to think about how you want to retire and when. Perhaps you want to save more, or perhaps you want to access your savings later. It's up to you. With most schemes, you have the flexibility to choose your retirement age. You can increase this age throughout your journey if you feel your savings aren't on track. Remember, your selected retirement age must be 55 or over. When you are approaching retirement or your selected retirement age, you should be starting to think about the different ways you can take your money and how these fit with your plans. You can start to develop your own personal targets based on your individual circumstances and aspirations. You should start to think about what kind of lifestyle you could have in retirement, depending on your salary, household, and retirement savings.
So like our state pensions, will we receive our money every month?
Yes, that is one way, but there is more flexibility than a state pension when accessing your retirement savings from your workplace pension. There are 4 main options for taking your money. You can take a flexible income. Flexi Access Drawdown allows you to select some or all of your pension pot and take a maximum of 25% of the amount as a tax-free cash sum, while the remainder stays invested. Take it all in one go. Take it in a series of cash lump sums. Get a guaranteed income. You could choose more than one option, and you should also shop around to find the best provider for your needs. Be aware some of our schemes do not offer all of these options. Please read your member booklet, usually found in the document library of your scheme website, for more details.
Will the savings in our pension pot be taxed?
Yes, you can usually take 25% of your pot tax-free, but the remainder could be subject to income tax. These options and tax implications are explained in the Your Options for Taking Your Money section of your scheme website. You can also visit Money Helper here, www.moneyhelper.org.uk.
Say I needed access to some of my retirement savings for an emergency purchase or to pay bills, but do not formally want to retire. Can I still pay into my pension after?
Yes, you can access your pot after the age of 55 or earlier if due to ill health, but be aware of the Money Purchase Annual Allowance, MPAA. This limits how much that you can continue to pay into a pension. Once you access your pot, it will reduce the amount that can be paid in on a tax-free basis each year. You can get all the latest pension limits at moneyhelper.org.uk.
How is the MPAA triggered?
Generally, once you start to take an income from a defined contribution pension in the form of a taxable lump sum, or if you take flexible income after you've taken the 25% tax-free cash, excluding small pension pots. Also, some people will have to consider that there is a limit to the amount you can build up in all of your pension pots over your lifetime without incurring extra tax. This is known as the lifetime allowance. These are important decisions, so start thinking now. Get ready for retirement, review your options, and make a plan that's right for you. If you're less than 10 years away from retiring and want more information to help you, go to the retirement section of your scheme website. For help understanding the choices available to you, visit PensionWise, a government service from Money Helper that offers free, impartial guidance about your defined contribution pension options. You can book an appointment once you're age 50 or over. We also recommend taking financial advice. Visit unbiased.co.uk to find a financial advisor. Be aware they usually charge for their services.
So hopefully that video was useful in giving you a kind of an overview of what to expect at retirement and where you can find out more about retirement options and also about how to use our planning tools. Now, it mentioned in the video the retirement planning tool, which is something that you can access either from your scheme website or from Manage Your Account. And this is the tool that will help you regardless of your age, doesn't matter how young you are. It'll be useful to see if what you're saving now will give you back what you're hoping for at retirement. So best to access it if you can from your online account, because then it will actually make sure that it includes lots of your information without you having to put it in. It will automatically be pre-populated at that stage. So definitely something worth looking at, and we do recommend to all our scheme members that they look at this at least once a year, and it will just help them to kind of keep an eye on throughout their working life whether or not that they are on track. So we'll now move on to an important part of our presentation, getting pensions into one place, and we'll start with next steps so that you know what to expect, when and where. So just a reminder that you became a member of this pension scheme in August, and during this month, September, you will be receiving details about how to manage your account with Legal & General, and that will give you details of how to register for your Manage Your Account platform. If you've experienced any difficulties with that email going into spam, then please do contact your employer. They've done everything they can to try and whitelist those emails. But if you haven't received the information and you think you should have, then please do reach out to your internal teams so that they can get that resolved. Now, during Q4, you will receive a communication from us at Legal & General by email regarding the option to transfer your existing pension benefits to the Restore pension plan. Please note that transfers will not happen automatically. Now, for members of the Nest scheme, they'll have a different process for transfers than that from the Scottish Widow and Standard Life members. So Nest members will not receive that communication, but what they can do is request a transfer from Nest to Legal & General via Manage Your Account. And we'll cover more about what to consider when making a pension transfer and the process shortly. Now, if you are a Scottish Widows member who decides to make that transfer following the communication, the transfer will come across to Legal & General in January of 2024. And for Standard Life members, that transfer, if you've requested it, will take place at some point during Q1, and an actual date will be made available in due course. Now, there is quite a bit to think about when you think about moving pensions, and if you've got lots of other pensions and you want to know if you can transfer them into this scheme, you will find this section helpful. Now, before making any pension transfer, it will be really important to compare the product that you have with your existing provider against the pension you're moving to. So you'll need to consider things like if there are any charges or penalties to exit your previous pension. They're pretty rare, but they are sometimes occur. You'll need to compare the level of annual management and fund management charge to look at what represents the best deal for you. You'll need to look at investment options and the options available at retirement to check again that this is in your best interest. And you should always check that you wouldn't lose out on a benefit or a guarantee that is built into that pension. Now, if you are looking to transfer a defined benefit pension, a final salary scheme, with a value of more than £30,000, you'll be required to seek advice from a financial advisor, and this is very much for your protection. Regardless of the size of your pension, you may still want to take financial advice on any type of pension if you would prefer a recommendation. Now, if you'd like to make a transfer, you can make a transfer from Manage Your Accounts. And one of the ways that you can do that is to use My Future Now, which is our pension tracing and consolidation service that's provided by us at no cost to you, the member. And you'll be able to register for the service. You can access it from Manage Your Account and from the scheme website. Give some basic details such as the national insurance number, an employer name if it's an old pension, or if you know the provider. And the team will then find that pension for you. They'll highlight if there are any special guarantees or benefits built in, and they'll recommend in that instance that you take financial advice. But if you're happy, you can transfer that money across to Legal & General. It's a really straightforward process, and they'll email you and let you know along the way of what those steps are. So let's just have a look at the resources. So your pension scheme website is where you can find all that educational content and information that's specific to the scheme. So it's been broken down into 4 steps, as we saw a bit earlier. So that should help you find the information that's relevant to you. If you go to the helpful resources section at the top, look at the document library, you'll find your scheme member booklet. You'll find your investment options, guides on approaching retirement, and even the planning tools as well. You'll also be able to access through the scheme website Go and Live, which is our financial wellbeing hub. And this offers lots of information and support on a range of topics, everything from retirement planning, budgeting to mental wellbeing. We also provide access to our Rewirement podcast series here, and these bring together pension experts and savers to talk and discuss a wide range of topics. Now, one of the things that's really important to do as a new member of the scheme is to ensure that you've registered for Manage Your Account. And remember, you will need your welcome details to register for the first time. Once you're logged in, you'll be able to see the value of the pension, monitor transactions, access the planning tools. You'll also, very importantly, be able to provide the details of who you'd like your benefits to go to in the event of your death. And we call this nominations of beneficiaries. And this will be separate to any death in service cover that you have at work. So one of the steps you'll need to do is to register for the service and to nominate the people that you'd like to leave the pension to. Remember to update it if any personal circumstances change in the future. Now, through Manage Your Account, you can also manage your savings and investments, so you can look at changing your investment options if you wish. You'll be able to view benefit statements as they appear annually and even change the date that you're planning to retire. And to help you with different areas, we've created 2 open university courses, which are free and take 4 hours to complete. One is at midlife, so aimed at people in their 40s and 50s. The other is a retirement planning course, and they'll help you take a deeper dive and understand what your next steps should be. Now, it is important to get all the support that you need to help you to make decisions about the future. So just as a reminder, the Money Helper is the new name for the government body that brought together PensionWise, the Money Advice Service, and the Pensions Advisory Service. And they've got lots of useful information about all things financial, but also if you're looking for financial advice, what the costs may be and what you should expect. There's a midlife course that the government offers too, and if it's personalised financial advice you're after, you can use unbiased.co.uk. Now, through being a member of this workplace pension scheme, you'll also have access to our financial advice service. You will require a pension pot of £20,000 or more to access the service. And the team of advisors can help you in a number of ways, including looking at the types of pensions that you've paid into, including the state pension, your other pensions and defined benefit pensions. They can help you with tax implications for accessing your savings and how to invest your savings in a way that reflects your plans. Now, they may be able to help if you have less than £20,000 in the pension, so more than 10, and are considering taking your money due to early ill health. And to find out more, if you visit the scheme website, there's a dedicated area there on the financial advice service. So just to highlight that manager account access is available during September. So as you receive your welcome details, please register and nominate your beneficiaries so that your loved ones are protected. Do remember to look out for the communications if you're a Scottish Widows or Standard Life member about the option to transfer your benefits in the existing schemes to Legal and General. If you're a Nest member, remember that you can transfer your savings yourself via manager account, and that could be through My Future Now. Now, conscious that I've been talking for quite a while, I'm sure we've had some activity in the chat. So let's make a start on looking at the questions. Let me just go back, Sarah and Paula. Let me just have.
We don't seem to have any at the moment, but if anybody, it's quite unusual. So
Yeah.
Guys, feel free to put your questions in the chat. I've just preempted some conversations that we had post Wednesday's call. If you haven't received the email, I would suggest that you check Mimecast, as that is where a lot of emails have been kept, despite the fact that we aim to whitelist these emails from L&G. So I would really encourage you to go to Mimecast to see the emails that are in there. There you go. You got one from David, Charlotte.
Yes. So David, that when I mentioned the timescales and we looked at the next step slide, yes, that was in reference to the restore pensions that are already in place, either with Scottish Widows, Standard Life. That yes, there's a transfer process. So you wait for a communication in Q4, should be towards the end of November. If you want to transfer your money, you can then use that bulk transfer process, and that will happen then in early Q1 of next year. So yes, but outside of that, if you've got other pensions, you can still use the My Future Now service through manager accounts, and they can help you to transfer any other pensions that you have. So I hope that clears that up, and do post if I've not cleared that up for you. I'm just going to scroll back a bit. Yes, so we have had a question about, is investing your pension pot mandatory? Yes, so the way that a defined contribution pension schemes work is that the money that you pay in needs to be invested. You do have a choice as to where that money is invested. Your trustees will have selected that default option because they'll feel that that's suitable for the majority of members, but there are other choices available. And if you want to choose a different investment option, you can. So you can browse the range both on the scheme website and through manager accounts. But in answer to your question, yes, it is mandatory to invest your pension in these types of schemes. Yeah, copy of the presentation material will be available. So happy for the slides to be hosted somewhere if that's useful.
It will be.
Perfect. And is there an option to have Restore's contributions paid into a SIP instead? So a SIP is a self-invested pension plan your employer has set up and using this pension scheme. So generally speaking, that is where any contributions your employer will now make to the pensions will go into this new Legal and General workplace pension scheme. So to my understanding, that's the only option, but do correct me if I'm wrong, Paula.
Yeah, Sarah's just answered that question for Eros. So the Restore plan is a standard offering, but you can choose to move your money up to SIP if you wish to do so.
Perfect. Yeah. So once the money's in the plan, it's up to you then if you want to transfer some of that into another scheme. But the contributions that come from your employer will go into this pension. Somebody's logged into MYA but doesn't have the option for My Future Now and can't sign up going to that address. That will be made available within manager account. I'll go back and check with my contacts that has all been set up. That's just normally just a matter of course, but you will have a transfer pack option as well. So if you go to manager account within the home page screen, once you log into your Restore pension plan element, on the home screen, if you scroll down the page, there will be a transfer impact section, and it's under that My Future Now sits. But you'll have two options. You can either use My Future Now, or you can use the standard transfer pack process. So there'll definitely be one of those sitting there, probably as My Future Now, but it just might not be that obvious the first time you log in. So my Scottish Widows pension, moving on to the next question, was converted to a retirement account a few years ago. Can this be transferred into the L&G like a normal pension? So if I understand you right there, Scott, it might be that you started to access your money in that pension scheme. So therefore, you may have moved it into a different account to be able to access it. So you'll probably need to check with Scottish Widows on that. That would be the best course of action as to what the status is of that pension, as to whether... Sorry, I was muted mid-sentence there. So best to get in touch with Scottish Widows and find out if it's possible for you to still transfer it. But sometimes once you've accessed a pension, it's been crystallised and you can't then normally transfer that into this type of active scheme. So best to check with them. Let me just have a look. Oh, my question is, I'm from India. If after a few years I decide to move back to my home country, what happens to my pension? What options do I have? Great question. So you can transfer your pension from the UK to a qualifying recognised overseas pension scheme. So if you go to gov.uk, look at overseas pension transfers, they'll show you every country and which schemes are available. So do have a look and see if there's one available in India. I'm sure there is. And you will then be able to transfer that across to that scheme in India. As long as it's qualifying, you can do so. If you can't, then the other option is, of course, that you can leave your money in the UK and you can draw it from the UK from your retirement savings. And there's some good information on the PensionWise website about doing that in terms of tax implications, currency conversions, etc. But you have many options available, one of which is to transfer. Let me just have a look at Anthony's question. So when trying to find a pension, how much information do I need? I'm not sure I know all the provider names. So you can do this on your national insurance number, or you can do it on your employer names. So if you know where you worked and the years you were there, something I did myself using My Future Now, they were able to find my pension from that information. So yeah, absolutely not to worry if you don't know your provider name. You can do it from your national insurance number or your employer name. Somebody's asked, it looks like you can change the percentage you invest. Is that right? Could you lower the percentage you invest? You have to invest all of your pension savings into this scheme. Obviously, later on, if you want to, you can transfer them away, as we've said, in regards to the SIP. But you can choose where you invest, and you can select different options for different percentages of your pension. So let's say somebody wanted to invest in partly cash and partly shares, they would be able to mix their investments and split their pot out so that they were invested in different ways. But you do need to invest all of the pot. So just to check, I've understood the question and I am giving the correct answer in response. So hope that helps. Okay, will employer and employee contributions be made shown separately in the L&G account when my Nest contributions show as zero as my salary sacrifice was put together? Yeah, so if you're using salary sacrifice, it will always show as an employer contribution because they are reducing your pay by your pension amount and they pay that in on your behalf if you're using salary sacrifice. And they do that because it's the most efficient way of paying into a pension, because you then often still save on tax and at source, but you also benefit from national insurance savings by doing that as well. So the answer to your questions is yes, it will show as an employer contribution. If you're unsure of what you're paying in, then you can reach out to your payroll teams or your other teams internally, and they'll be able to let you know exactly the contribution that you're making.
That's right. And sorry, Charlotte, and I put earlier on in the message in the chat that it will show on your payslip, and it will also be in your consultation letter as to what you contributed. If you need that clarified, then contact the payroll team.
Perfect. And is there a Sharia law fund? Yes, there is. We do have a Sharia law fund. So when you look at the range of funds, that's one of the funds under the ethical options. Let me just have a look at the next questions. So when we receive welcome packs, if we've opted out of salary sacrifice, is there a way to confirm that we've opted out of salary sacrifice through my account? So manage your account will show you the contributions that have gone in. and it won't change how you're paid into the pension. So my understanding, Paula, is however people pay into the pension now, that will continue when they move into the legal and general scheme.
That's
Is that
right.
right?
That's
Yeah.
correct. Yeah.
So that's probably simpler. How do I increase my contributions to my pension? So you do that via your employer. Usually that's the best way to do it, is through your pay. That's the easiest way, particularly if you're using salary sacrifice. So you get in touch with your payroll internal teams and they'll make the change to your deductions for you. And then they pass the contributions to legal and general. And I think that was the bottom end of the questions there, because you just clarifying, Sarah, for me. That's how it looks on the pay slip. So thank you. Any more questions at all?
Doesn't look like it.
Stunned silence, perhaps.
Yeah.
Pensions for an hour.
Sorry,
I hope it's
one
been
other
helpful.
question. I
Go
did
for
ask
it.
it in the chat. Is that when we do find our old pensions on the website, how much information does it actually give about our previous pensions?
Yeah, it gives you quite a bit of information. So, for example, they'll flag if you've got guaranteed benefits, they'll show you the charges, etc. Obviously, if you want to take look at the full detail of what the investment options are with that pension and all of the retirement options, then you'd need to have a look in more detail by contacting the provider. But it will show you a good overview of the information.
Okay, thank you.
That's all right. Sorry, I missed that part of your question. Apologies. I was reading and new questions are coming in.
No worries. There's one more.
Is there a time limit on transferring your Nest pension over to legal and general? Not to my knowledge. If you've got a pension with another provider, you can usually transfer them across to another scheme at any point. I'm not aware of any time limits, but you might want to get in touch with Nest if there were any special circumstances that I wasn't aware of, but not usually the case.
Looks like all the questions have been answered, Charlotte. Thank you very much.
No problem.
Apologies, everybody. Technology has let us down in that I couldn't record this session and neither could Sarah, so I'm not quite sure what happened there. However, the slides will be available on Circle for you to refer back to. You still have the pension consultations inbox if you've got any particular pension related questions that you want to ask. That is still open until the end of September, and obviously any other general queries you can send through to payroll with regards to, you know, your particular pension and increases, opting out, etc. So that is all still open and available to you.
Yeah, and if you need to speak to legal and general, don't forget we have our helpline team available. So once you've got your account with us, if you've got a question, give the team a call. You can also visit your scheme website for lots of useful information, and of course manage your account as well if you want to look at your own personal data. And do make sure you've registered and you've nominated your beneficiaries.
And just lastly, please make sure if you haven't had your email that you check Mimecast, because that's where they seem to have been kept. We had a lot of queries on the call on Wednesday, and when people did check, that is where they were. So please do that if you haven't received anything.
But
Thank
Paula,
you, Sean.
just
Sorry,
quickly,
Anthony. Yeah.
all the questions that we're asking on the chat here, are they going into the FAQs on the Circle, or?
They're not. But let me pick that up separately, Anthony, because I think, yeah, it might be worth having some sort of an FAQ document. I think because we're not able to, if I was recording, I probably would have turned off at the questions point, because people may have had particular individual questions that I didn't want aired. But yeah, I think it might be a good idea to pull out the more pertinent ones and put some FAQs in as well. So good shout, Anthony.
Okay.
Just to let you know, Paula, quite a lot of the questions, the answers to them, unless they were kind of employer specific, the answer would be on the scheme website. So there'll definitely be all those types of information that we've covered today. There'll be more detailed information on the scheme website as well, which may support people.
Okay, I think there's two more messages in there.
Ooh.
Stephanie.
The email being blocked. I think it might be a whitelisting issue, is it?
Can't seem to get the access code email to set my account.
Could it have gone to Mimecast?
Again, Alex, I would recommend you go to Mimecast. Everybody else has found their emails there. So please just check that. And then Stephanie's question.
Yeah,
Hi.
sorry, that's why I've got it on the where I should see this. And the guys, as they come in, are just pointing out a few things that some of the emails, obviously, they've been blocking them because it comes up is it okay to release his emails? And it says Mindcast. The guys don't know what it is. So what they're doing is they're deleting it and blocking them.
Right. So they're not realizing that actually, okay, we might need to look into that, Alex. I mean, we preempted the fact that we needed to whitelist these. We're obviously not in control of what people see and then do with them afterwards. So, I mean, again, I'd just check under deleted and see if there's anything showing there, but we might need to pick that up separately.
Yeah, and another suggestion when you do get into manage your account, if you register with your personal email address, once you do register, that might help things as well, because then any emails that you receive subsequently from manage your account or Legal in General, they'll go into your personal emails, and that might be helpful too once you've got over that initial hurdle. We've got another question there, so just going to pick that one up.
There's just the annual charge percentage recap.
Yeah, so there's a question on the process for Nest as well. So just to clarify for you, Ian, that the process for Nest members is to go to Legal and General's Manage Your Account platform and then to make the pension transfer, either by requesting the transfer pack, which you can do, and then you fill in your Nest details and we'll make the transfer, or by going through My Future Now, which is a service that's available through Manage Your Account. It should also be available through your scheme website as well. And in terms of the charging structure of the scheme, we did cover these earlier, and forgive me, I've totally forgotten what they are, but I can just read them out. So the annual management charge is 0.27%, and then the fund management charge for the target date funds is 0.15. So your overall charge is 0.42. So hopefully that helps with just clarifying those charges.
I think again, there's the last message is from Angela, who is from IT. So she's given us an IT explanation. Impersonation project policy is blocking some of the emails. All of the supply details are whitelisted. It's likely that there is something within the body of the email that's triggering this. Angela, if you have any suggestions in terms of how people can access it, everybody that had queried why that they hadn't received the email at all found them post the call on Wednesday in Mimecast. So I think we might have to take that away. We did try to manage it, but
yeah, it's difficult, isn't it?
Yeah,
with these sorts of things. I'm just going to copy a link in. We've had a question on annuities. So just to kind of pick up on that point, that yes, you can buy an annuity product with your Legal and General pension. That's one of the ways of taking your money. There are other ways as well, which we kind of heard a little bit about in the video, and I've just posted the link to that section of the scheme website that might be helpful. In terms of what you get back from your annuity, that depends on the options and the type of annuity that you buy. So there's different types. Some of them give you a guaranteed income for the rest of your life. Others, it's for a fixed period. And you have different options of what you can include in that annuity that will dictate the kind of rate you're going to get. A really good place if you're looking at annuity rates after you've understood all the options is the Money Helpers website. You can actually have a look at all the current rates for annuities, which might be quite helpful, totally impartial as well. So a great place to go and have a look at that. So I hope that helps, and you've got the link there to the options at retirement on the scheme website.
Alex Samick has a question. Is Call 8 the Legal and General pension app?
Yeah, it's the current app that we're using at the moment, but we are launching a new app by the end of this year. So watch this space. If you get registered for Manage Your Account, then you'll have that all set up. And then as we launch the new app, as you've received details of that, you'll then be able to use all of that through the new app. So I would personally wait for the new app, because it's only now a matter of, short time frame before we'll be launching the new one. But do register for Manage Your Account. Technology moves so quickly, doesn't it? So we're always improving things. Indeed.
And talking about technology, thank you, Ian, for coming back with. So as you can see, Ian's just posted in there that no pension-related emails and they're rejected. So for the person that said that they will have released from Mimecast and then deleted them, I'm assuming that they can go to deleted and find that email in there. If not, I would register that you haven't received it on through help desk, but we've tried
Yeah.
to do everything we can to release those emails that have been sent
I'm just
through.
going to post our email address internally as well. So if you do, you might be able to bypass security. They'll talk you through security like through an email, and you might be able to get in that way. So do use that as well. So as an alternative option. Obviously, they don't have any control over the emails that are coming into work, but they might be able to help you at getting registered.
Okay, Charlotte, thank you so much. I think that helps, and massively. And obviously, we'll get the slides up. I think everybody should know the routes now to contacting us if there are any queries. And what I would also, a call to action, please ensure that you're reading all the material that we've sent. There's an awful lot of material. We have been receiving an awful lot of queries where the information is actually in the documentation that we've sent already. So I would encourage you all to take a look at that and, get the information that you need. Thank you, Charlotte. Thank you, everyone.
Bye, everyone.
Thanks a lot. Take care.
Bye-bye.
Bye-bye.